Okay, today let's talk about something that's been on a lot of people's minds lately, especially with the economy feeling a little bit shaky. How does a company like Tesla not just survive, but thrive during a recession? Other American auto manufacturers are scrambling to keep their heads above water. Well, I'm here to argue that Tesla has a marginal advantage, a set of unique strengths that gives it an edge over competitors like Ford, General Motors, and Chrysler, even in tough economic times. Let's break it down. First, let's set the stage. A recession hits, and what happens? People tighten their belts. Disposable income shrinks. Car sales, especially for gas guzzling trucks or luxury sedans, tend to stall because they're big ticket items. Traditional automakers who've spent decades perfecting their internal combustion engine lineups suddenly find themselves with bloated inventories and factories churning out vehicles fewer people can afford. But Tesla's playing a different game. Its marginal advantage comes from a combination of innovation, operational efficiency, brand loyalty, and a forward-thinking business model that's recession resistant in ways its rivals just can't match. Let's start with innovation, specifically Tesla's dominance in electric vehicles, or EVs. While Ford and GM are playing catch up, think of the Mustang E or the Chevy Bolt. Tesla's been all in on EVs since day one. They're not retrofitting old designs, they're building from the ground up. The Model 3, Model Y, even a Cybertruck, they're purpose built for efficiency and performance. During a recession, fuel prices often fluctuate wildly, and consumers start looking for ways to save at the pump. EVs eliminate the cost entirely. Tesla's already got the infrastructure, think supercharging networks, and the tech lead. Other manufacturers are still scrambling to build out charging stations and convince buyers to switch. Tesla's not convincing. They're already there. Now let's talk about the cost efficiency, because this is where Tesla's advantage gets really interesting. Traditional automakers rely on sprawling supply chains, hundreds of suppliers for engines, transmissions, exhaust systems. That's a lot of moving parts, figuratively and literally. When a recession hits, those supply chains get disrupted. Think chip shortages or steel price spikes and production slows. Tesla, though, they've vertically integrated like nobody else in the game. They make their own batteries, their own software, even some of their own chips. Take the Gigafactory in Texas or Nevada. They're not just assembly lines, they're ecosystems. Fewer middlemen mean fewer delays and lower costs. In a recession, where every dollar counts, Tesla can keep prices competitive, or at least more stable, while Ford and GM are passing supply chain chaos onto consumers. They basically don't have a choice. And speaking of costs, let's not forget energy economics. Tesla's not just selling cars, it's selling a lifestyle. Pair a Tesla with solar panels and a Powerwall, products they also make, by the way, and you've got a household that's less dependent on volatile energy markets. Recession or not, people notice that. It's a long-term value proposition that legacy automakers can't touch because they're still tethered to the gas pump. Now, brand loyalty. We can't forget about brand loyalty, which in Tesla's case is huge. They have built a cult-like following, and I mean that in the best way possible. It's not just a car, it's a statement. You buy a Tesla, you're buying into Elon Musk's vision of the future: sustainability, tech, and innovation. Compare that to, say, Chrysler. No offense to Chrysler fans, but it's hard to get evangelical about a minivan. Tesla customers don't just buy, they evangelize. In a recession, when marketing budgets get slashed, the word of mouth momentum keeps Tesla moving, while others are begging for ad dollars that translate, hopefully, into sales. Plus, Tesla's direct to consumer sales model cuts out dealerships. No haggling, no middleman markups, no annoying salesmen. Ford and GM are still tangled in the old school dealership wedge, which costs and adds friction right when the customer wants simplicity. Customer's always right, by the way. Now, let's talk about operational agility. Tesla's a tech company, masquerading basically as a car company. Their software first approach means they can push updates over the air, fixing bugs, adding features, even unlocking performance boosts without a trip to the mechanic. Imagine you're a cash-strapped buyer in a recession. Your Tesla just got a new feature for free, while your buddy's F-150 needs a $200 service visit for a recall. That's a win for Tesla. And when demand dips, Tesla can tweak production faster. They're not locked into massive union contracts or legacy plants like Detroit's Big Three. They've got flexibility. Think Shanghai's Gigafactory, ramping up or down based on real-time data. That's a lifeline in a downturn. Now let's address the elephant in the room, price. Teslas aren't cheap. Model S can hit six figures. But here's the thing. Tesla's got options. The Model 3 starts around $40,000, less with the $7,500 tax credit. And it's the best-selling car in America. In a recession, people don't stop buying cars entirely. They downgrade. Tesla's got the premium market locked with the Model X and S, but they've also got the Model Y and 3 for the practical buyer. Meanwhile, legacy automakers are still pushing $60,000 trucks for a shrinking middle class. Tesla's range gives it an edge. It's not all or nothing. And don't sleep on the government support. Recessions often bring stimulus. Think infrastructure bills like green energy incentives. I know the Biden administration's already poured billions into EV tax credits, and Lord knows that's not ending very well because guess what? The government have not figured out how to spend money. Until now. The Trump administration is not going to let this go away. I do believe that they will still fund projects like the charging infrastructure, but it will be left to private companies, not some big government overreach that just wastes money. I'm not saying it should be Tesla, and I don't believe it will be Tesla. But let's face it, they are the best in the business. Now, let's talk resilience. Recessions expose weaknesses. Legacy automakers carry debt from decades of ups and downs. GM's bankruptcy in 2009 is a stark reminder. Tesla's not debt-free, but it's got cash reserves. Billions, thanks to strong margins and a market cap that dwarfs its rivals. Investors believe in Tesla's story. Even when the economy wobbles and the weather looks bad and they feel like a storm is coming, Tesla will be fine. The others are going to be in the eye of the storm. They already are. So now let's wrap this up. Tesla's marginal advantage in a recession isn't one thing. It's a mosaic. It's the EV leadership, the vertical integration, the brand fanaticism, the agility, the price flexibility, the government tailwinds, and the financial backboard. Ford, GM, and Chrysler aren't going anywhere. They're titans in their own right, but they're playing yesterday's game. Tesla's playing tomorrow's. In a recession, when consumers and markets reward efficiency, vision, and value, Tesla doesn't just survive, it pulls ahead. About 4 years ago, Elon Musk spoke on a Spaces chat on X. And back then, they were predicting a recession. At that time, Tesla didn't have nearly as much cash as it does today, and it didn't have its manufacturing process in place as efficient as it is today. Back then, he stated, we can probably build cars at zero profit for about a year and a half or so, which should get us through any form of a recessionary downturn. And I think we can survive and come out ahead of everybody else. That's a very powerful statement. It's like anybody. It's like yourself. Think about it. If you've got your emergency cash fund and you have 6 months, 9 months, a year and a half, you're not worried about a recession. You're not worried about losing your job. You're secure. That's the simplest way you can apply this. Now, listen, this is not financial advice. I'm not a financial advisor. I don't know your situation, but I do suggest that you take a serious look at doing some research into Tesla. I'm not a trader. I don't believe in trading. I buy Tesla stock for the long term. I don't care how low it gets or how high it gets. I don't sell at the top and I don't panic at the bottom. I'm a big buyer when it's at the bottom, and I'm just a happy, cozy little, happy to ride it all out to the end when it's at the top. And it's not even close to the top. Unless something goes radically wrong with our planet, I believe Tesla is going all the way to Mars. Pun intended.